We are talking housing, housing, housing with Lance Lambert from Fortune. Somebody you have to follow on Twitter. News Lambert is his handle. We're going to be talking about home prices. Everybody wants to know about home prices. Lance, what's going on with home prices? I know you track this stuff all the time.
Yeah, so we just came out of a historic period, 124 months of consecutive month over month home price growth from the bottom of the last crash, February 2012, through June 2022. And the first half of that is really just recovering, right? And really even into like 17 and 18, that's just getting back to normal, right? And in terms of the historic bounds. And then the pandemic housing boom, we go up 41% from March 2020 to June 2022. And since June, we've now had 4 consecutive months of month over month US home price declines. We're down 2.4%, but 2.4% after running up 43%, 41% feels like a bit of a drop in the bucket.
Yeah.
So
Yeah.
let's take a look at some of the charts. Can I share my
Yeah.
screen here?
I think so.
Okay. So
There we go.
here's a story I did yesterday. And now this is also something we've discussed before, which is Case-Shiller is not just like the middle of the market, like FHA and the Zillow Value Index. It's all US home prices. And it does it by resale. So it's taking a home that's sold and then looking at previous sales, and they have this analysis for figuring out the change in home prices.
Yeah.
So here's Case-Shiller going back to 1990. As you can see, we've come down a little bit. That's 2.4%, but it's not as much as it looks. If you look at this, you're kind of like, oh, we get a few more of these, we could be close. We're down 2.4 with this. This is 26% over 6 years. Now we did have 2.2% drop here, peak bottom. And then in that period, I think it was out your way, California, right? Some of the
Yeah.
bust out that way, bigger
Yeah.
drop.
San Diego, Southern California, the military left. Yeah.
Yeah. And we're getting some of that now in some of these boom towns and some of the bigger double digits, but nationally still 2.4% down. So not that much, but we have moved into a period of a little bit of a deflation in home prices.
Mhm.
And here's Case-Shiller going back to 2000. As you can see, there's our June peak,
Yep.
and we've rolled off it a little bit. It actually was faster at first, and I don't know if you could see this, but there's a little bit of a slowdown in this last one.
Yeah.
Uh,
It
so
almost looks like it's decelerating less quickly or bottoming out or
yes,
whatever you
we
want.
got a
Yeah.
little bit of a sharp drop there, and we're still only talking about less than 3% drop.
Mhm.
But we have slowed down a little bit. And these two red lines are some of the peak to trough scenarios we've gotten. And these are more on the bearish side. So
Mhm.
20%, really anybody in the 20% ballpark, I put them all the way max, the most bearish. And
Yes, I agree.
there's a few there, and a few of them, like Moody's, would need a recession to get there. 10% now, a little bit under 10, like 8, and then like 12, which is Ivy Zellman. She's at 12. This is kind of a little bit more in the middle. We've now seen groups like Goldman Sachs, Morgan Stanley, Moody's Analytics. A lot of them now have migrated closer to 10, and we still do have some less than that. And CoreLogic actually thinks we'll go up a little bit in the next 12 months. And Zillow thinks we'll just go down 1. And Fannie Mae and Freddie Mac are kind of like, oh, we'll go down just a hair. But this is what it would look like. And so even if the most bearish scenario happened, it would take us back to February 2021 levels. So we wouldn't even go back that far back in time because prices
Wow.
have went up so much. But we're not moving down at a pace that would get us there. If you take the 2.4% drop we've seen and you annualize that, that would be 7.6.
Mhm.
So to get to 20, we would need to sustain these little drops we've seen already for like 3 years,
Yeah.
or it would need to speed up. So we don't, in my mind, in this data set, Case-Shiller, have a path to 20 unless things were to really change in the near term. Like the spring market would need to like really start to see prices move down for us to have any path to 20.
Yeah, and again, to kind of tie in our first conversation, I think a lot of it is inventory related. I think if you head into the spring selling season and we don't get a wave of inventory, it's going to be even harder to get here because again, the motivated seller, right? The people that have to sell because they're unemployed or Zoomtown closes down or whatever. You need more forced sellers to have price cuts. Right now we have so many people that have listings that are like, if I get my price, good. If I don't get my price, I'll stay put.
Yeah.
Right. So it's
And you know what I call this dip right there?
mm-mm.
It was for sellers, just iBuyers, but we've gone through that now.
Exactly.
We've gone through the
No,
iBuyer dip, you know. So we're
I
gonna
I
need
agree with you
more.
100%, and I've said that many times. A lot of Phoenix and Austin's and Sacramento's and Vegas, I buyers become I sellers, and
Yeah.
they have to sell. They're exactly like banks. You read my book. I bought from banks, and they sell with a pattern, right?
Yeah.
Redfin CEO, you said it on this channel. If it's listed for 2 weeks and it doesn't sell, cut the price 2%. Cut the price 2%. That's the dip. And now we're bottoming out because I sellers are almost done.
Yeah, so we've moved through that. The next 6 months, we do have downward pressure still on new homes,
For sure.
because the builders, you know, they have a lot of this inventory they need to move. But I mean, maybe that moves it down more.
But
But
they're
you know,
but they're almost done too, Lance.
I
Lennar
think
said they're going to sell 5,000 units to private equity.
yeah, but that is a part of the downward pressure still.
Oh,
You know,
agreed. Agreed.
there are the institutional side sitting there, but they don't want 10% off from these builders. They want 20%, is
Oh,
what
yeah.
Alec Wolf
Yeah.
over at Zonda told me. So they're there, they're ready, but they want more from these builders. So there's still some from the builder side downward pressure. But then
Yeah.
how much pressure does that apply over to the existing market spillover? So we need more to happen to have a path to 20.
Yeah.
We're just, and that's just what the facts say, because we're annualized falling at 7.6. And this last one, if you just take it, which is 0.3 drop for 1 month, and you annualize off that one, then we're falling at like a pace of like 3 or a
Yeah.
little,
3.6. Yeah.
yeah. Which I don't know if it's fair to just take the 1 month, but if you take the
Yeah.
4 months, the 2.4 annualize it, that's 7.6.
Yeah.
But still not a path to 20. You'd need more things to change, I think.
I think one of the things that you pointed out that I agree with is we had some froth in the market. iBuyers were doing stupid things. They were paying too much. They were artificial buyers with endless amounts of money and they overpaid, which distorted a few markets. They're now I sellers going the other way. But when we look at 2023 in total, it's going to be a more normalized market. I believe it was Ivy Zelman who said there's $110 billion in private equity ready to deploy in single family rentals.
Yeah.
And
They want big
that's,
discounts, though. They want big
oh, they
discounts.
do. Yeah.
Yeah. But yeah,
Oh,
well, and that's the thing, though. You only there. That's a one-time downward pressure, right? Is
just
the
like the I sellers.
buyers and the
Yep.
builders. But once you've moved through that,
What do you got left?
what you know, and then there's also the fact the other downward pressure out here, the main downward pressure, the whole thing is pressurized affordability. But as mortgage rates move down,
Yeah.
and
6 weeks in a
also,
row.
yeah, although I think now what we're seeing in the bond market, we're going to move back up a little bit.
Yeah, we'll see. Yeah, it's down big today, but yeah, we'll see what this week's average. They were 6 weeks
Yeah. Well, they're
from last
lagged.
week.
So that's
Mhm.
last, not this Monday. That's actually Monday back. Those
Okay, got
Freddie
it.
Mac ones. Yeah. That's why
Okay.
I just follow the mortgage rate daily.
Yeah,
They do a good job.
yeah, they do a decent job.
We're at 6.55 today.
Nice.
But then there's also rate buy downs. Not a lot of people are getting that actual 6.55.
Mhm.
So here's pandemic housing boom gains, total gains, March 2020 to June 2022 is that whole circle, right?
Yep, I
And
got
this
you.
little sliver off is the 2.4% drop. So a 2.4% drop has erased 3.3% of gains, if that makes sense.
3.3% of the gains total. Yep.
So total gains now is 38%, which is massive, right?
Yeah, maybe you've looked at it because you're such housing focused. I do not remember a 2-year period
Never.
ever.
Never. Yeah.
Yeah. So it's funny. You've read my book. I invest in Fresno, California, for folks who don't know. And there was a time very early in my career, I think it was 05, 06, where the Fresno MSA was the #1 market 2 years in a row. And I believe both times were over 20%. Let me just tell you, that is not healthy.
No.
And that whole last year, that whole 06 was all fake, all ninja loans. Just people were getting loans that shouldn't have. And then we paid the price. My market fell 75% peak to trough. And that was painful. So it can, but yeah,
that's hard. That's hard to imagine. A 75% drop. That's a real falling knife.
Yeah, and it took 5 years just to kind of tie that out, right? This wasn't overnight. There's a lot of people that think housing crashes overnight, and it's inelastic. It doesn't happen that way. So it was 5 years in the making.
No. Yeah. And that's another part of this is, let's say we are working towards a 10% peak to trough, right? And that takes 2 years to get there, and we're kind of chipping away a little here, a little there. Well, if you're somebody out there who doesn't own a primary home and you start doing the math, and with rent and all of this other stuff, is it worth waiting out for this potential drop? Or, in your world, it seems like the smartest thing to do is just make sure you're not getting alligator properties, right?
Like, without question.
Cash flows are cash flows, right? And if you're waiting out for, and I don't want to get too much into that side of it because it's speculation, but
yeah, no, if you're going to be an investor, right, which is again a part of the audience here, you have to get cash flow day one, never bet on appreciation, get fixed rate debt, take all the variables out that can hurt you. A lot of people that are going to be feeling the pain in the housing market today are people that got bridge debt or short-term debt. They were going to burr a property and they got a hard money loan. And there are going to be people that get hurt. There will be bankruptcies because of bad real estate investments, but it will be a very, very small sliver, and that will be absorbed in the market. Last time I saw from National Association of Realtors, the distressed sales doubled. It went up to 2%. Right. So again, crazy.
And here's the regional data. Case-Shiller tracks 20 markets. This is pretty similar to what you'll see in any of these indexes, whether it's John Burns Real Estate, Zillow. There's also Black Knight. It's an East Coast, West Coast divide right now.
Yeah.
The West Coast has just moved down faster. Denver 5, Vegas is down more than that.
It's got to be up to 9%. Yeah, it's
there's a little bit of a lag here with these, especially these two, but there's a lag with the Case-Shiller. But I think that Phoenix and Vegas are down more than this. San Diego, LA, San Francisco. It feels like San Francisco went down this fast in like 3 months. I think that market is just, and Seattle, I think they're just very sensitive with rates in the stock market. And
I agree. Very tech. Yeah. There's a lot of RSUs or option. And when you get scared, you don't buy, right? I mean, San Francisco's median price is like $1.8 million. You're not going to sign up for that mortgage payment very easily.
Yeah. And then on this side of the US, I would put these markets more in the 1981 category in terms of what we've seen. Less than 2, not even 1 in Chicago. And also keep in mind, we don't have a Case-Shiller index that dates back to then for resale. So it's very likely, even though 1981 didn't get like the year-over-year drops, it probably was getting these month-over-month declines.
For sure.
Just here and there. So that's why I kind of, in my mind, in my mental model, I see these more of the 1981 category. Detroit, Cleveland, Boston's the most on the East Coast at 3, Charlotte, Atlanta, Tampa, Miami. And then if the last chart I have here is just, if we take everything back to March 2020, look at March 2020 change to October 2022. So this would account for some of the declines we've seen recently.
Mhm.
even with an 11% drop. Seattle's still up 37% from March 2020.
Yeah.
Portland, San Francisco's up the least to 26.
Yeah, the
LA,
other thing I want to highlight here is not only do you have appreciation, but you have probably locked in lifetime low 30-year debt. You have borrowed 30-year debt sub 3%. You are getting debt below the cost of the federal funds rate, which is now 4.25 to 4.5. You are a genius, and you are not moving if you have this going on. So it's crazy. Dallas 48%. Oh my gosh.
yeah, still. Oh, you got to see Florida.
Oh no.
Tampa 63.
Oh.
Tampa's the number one now because of the drops in Phoenix. It took over number one in the Case-Shiller for
My
pandemic.
goodness.
And that's what's happened recently is the drops in the Boise's and the Austins and the Phoenixes have now taken the Florida markets and moved them up more in terms of who has the most pandemic housing boom gains. That's
Wow.
not necessarily a good thing. And I am
No, it's
watching
generally
Florida
speaking not a
next
good
year.
thing.
Yes.
Yeah.
And
Trees
Miami,
don't go to the heaven for a reason.
yeah. So Florida is a place to watch in 2023.
I agree.
Uh, it's possible that there's just a lag between how they're reacting and how some of the boom towns in the Mountain West and the Southwest are reacting. So
Yeah,
we'll,
it's going to be very again Florida's, migration, right? Do they continue the kind of baby boomer migration where the people are leaving the cold going south? Does Florida become a tech boom, a Wall Street boom? We have all these companies move. I mean, it's going to be wild to watch in
and they still
2023,
have
Lance.
iBuyers because that's where they've been making some of their money to make
Oh
up
my
for.
goodness. No, folks, don't go iBuyers. No. That's where they're making up for all their losses.
Yeah, they're still yeah.
It's
So there's
crazy.
still risk in those
Oh,
those markets.
yeah. Yeah. Is Open Door the last iBuyer left, or is I guess OfferPad and Open Door are
That's
both?
still kind of yeah. They're still trying to make it.
Okay. Yeah, it'll be very interesting to
Yeah,
see where those folks go in
and
2023.
and not many people know this, but Open Door is actually a Fortune 500 company because of all their
Really?
sales last year. Yeah.
I did
So
not know that.
yeah. So I'm about to write a story with the headline housing downturn sees Fortune 500 company stock fall from 34 to $1. That'd be Open.
Something like that. It's not, I don't know what the percentage is, but that feels like a 99% drop to me or thereabouts. So that,
It's pretty high. Yeah.
yeah. Yeah. Well, Lance, I appreciate all you do. I read your articles on Fortune. I clearly follow you on Twitter. If somebody wanted to do that, how would they do that?
Yeah, you can find me on Twitter at News Lambert. If you see something interesting about housing on Twitter, feel free to tag my handle into it and I'll take a look. And then if you want to read my articles, Google Lance Lambert Fortune, and you can, and I'll pop right up my author page. And then also, every week I chat with you. So those are the three places people can find me.
There you go. And Lance has his own playlist. It's called Lance. That's my sophisticated name for it. Thanks, buddy. I appreciate you.